In today's fast-paced financial landscape, how can you possibly keep up with constant market changes?
You're in luck. Leading experts like Joseph Wang, Trade Brigade, and Dr. Lacy Hunt are here to share their insights.
And the best part? Our AI-driven summaries distill these insights into minutes, saving you precious time.
So sit tight. Our first guest, Joseph Wang, dives into the critical role of interest rates in today's market.
In today's discussion, we're exploring insights on the current market dynamics.
Joseph's analysis stresses the significance of interest rates and inflation for investment decisions.
Joseph Wang points out that current interest rates are a major factor influencing market stability.
He notes that elevated volatility is likely to persist.
Joseph Wang observes that inflation rates are exceeding forecasts.
He highlights a noticeable shift in consumer spending habits.
Joseph mentions that investor sentiment is cautious due to market volatility.
He states that many investors are gravitating towards safer assets.
What does Joseph Wang predict for the market?
Joseph predicts continued high volatility with corrections likely in overvalued sectors.
Joseph encourages investors to monitor interest rates closely.
He suggests diversifying into safer assets for volatility.
Good morning, everyone. Today's pre-market prep centers around the upcoming speech from Federal Reserve Chair Jerome Powell, which is expected to stir the market.
Indeed, as we await his remarks, all eyes are also on the ISM manufacturing PMI report due at 10 a.m., which might introduce some volatility today.
Given Powell's history of influencing market direction, how should traders prepare for his comments?
Traders should focus on managing risk and being prepared for rapid changes in market sentiment based on Powell's language.
The ISM manufacturing PMI report is releasing at 10 a.m., which is expected to cause some market volatility.
Exactly. Traders should keep an eye on how this data influences market momentum.
For the S&P 500, watch the 58.95 level closely, as it could dictate short-term direction.
And the Nasdaq displays some mixed signals that traders should monitor before committing to positions.
If the ISM report comes out stronger than expected, we could see a market rally.
Conversely, worse than expected data might lead to a sell-off, particularly if Powell's comments sound hawkish.
Today's trading strategy emphasizes patience. We're entering a volatile phase.
Make sure to monitor Powell's speech closely, as it could shift market sentiment rapidly.
Today we're analyzing insights from Glenn Kelman, CEO of Redfin, regarding the current state of the housing market.
Kelman points out that we are seeing evidence of a real correction, with home prices expected to decline.
Kelman emphasizes that the current housing bubble is among the largest in U.S. history, based on historical pricing data.
He argues that prices have dramatically diverged from historical trends, which typically align with inflation.
Kelman highlights that inventory is piling up as mortgage rates rise above 7%, indicating a shift in the market.
He notes that different regions are experiencing vastly different market conditions, with some facing drastic price declines.
According to Kelman, new home builders are quickly lowering prices and offering incentives, reflecting their ability to adapt to market demand.
In contrast, existing home sellers remain resistant to acknowledging the market shift.
Kelman reports that economic anxiety is leading many potential buyers to cancel or defer plans to purchase homes.
This is contributing to decreased demand and a bearish outlook on home prices as we move into 2025.
Kelman predicts a modest decline in home prices of at least 1% in 2025.
If trends hold, we might see a significant correction as the 2025 housing bubble continues to unravel.
In conclusion, staying informed about new home market trends will be key for potential buyers.
Kelman's insights suggest preparing for a potential downturn by monitoring both regional price dynamics and macroeconomic conditions.
Today, we'll examine the economic outlook with Dr. Lacy Hunt, who provides a concerning perspective on our recession risks.
Dr. Hunt notes stark signs of economic weakness largely overlooked by the market.
Dr. Hunt indicates that current recession probabilities are underestimated, perhaps surpassing 50%.
He cites decreased consumer spending as a major contributing element to this outlook. Dr. Hunt highlights that consumer expenditures in Q1 were significantly weaker than previously indicated, with only a 1.2% rise.
Are delinquency rates among borrowers rising?
Indeed, serious delinquency rates are increasing, indicating substantial financial pressure on consumers.
Dr. Hunt underscores the steep drop in corporate profits, indicating potential risks ahead for the market.
He contrasts S&P earnings metrics with the more reliable BEA profit data, cautioning against unfounded optimistic forecasts.
What is Dr. Hunt's perspective on the current Federal Reserve policies?
He believes that the Fed's actions are overly restrictive, predicting a series of interest rate cuts this year.
What should investors expect in new light of Dr. Hunt's predictions?
Dr. Hunt encourages being vigilant regarding economic indicators, predicting an imminent recession given current trends.
How can viewers practically apply Dr. Hunt's insights?
Dr. Hunt advises staying informed about economic trends and adopting defensive strategies as key takeaways for navigating potential market turbulence.
Today, we're examining concerning consumer behavior insights raised by Steve Van Meter regarding the recent Texas retail report.
Steve emphasizes a significant drop in retail sales activity, with the Texas report revealing a severe decline in consumer spending.
Steve describes the recent contraction in Texas retail sales as a significant warning for broader economic issues.
He suggests that these shifts in consumer sentiment could presage national economic challenges. According to the Texas report, the sales index plummeted to minus 30.5, the lowest recorded since April 2020.
This indicates troubling signs from a national perspective as consumers reduce spending. Steve notes that retail sector employment is contracting and hours are being reduced.
Such changes could imply worsening job security for retail workers. Steve highlights that the personal savings rate has risen to 4.9%, a response to economic uncertainties.
This indicates consumers are worried about their financial futures and are saving more. Looking ahead, Steve warns that ongoing weak consumer spending may lead to a larger economic downturn.
He indicates the Texas report may foreshadow national economic trends, showing widespread challenges ahead.
In conclusion, Geoff stresses the importance of businesses recognizing shifts in consumer behavior.
Grasping these trends is crucial to navigating potential economic challenges.
Welcome to Real Estate Mindset. Today we're discussing housing market insights with Emily Brown, the CEO of Compass.
Emily, what can you tell us about the current volatility in housing prices and the mortgage environment?
Emily, can you elaborate on the factors affecting the housing market?
Certainly. The recent fluctuations in mortgage rates indicate that potential buyers should be cautious.
Emily, how are current mortgage rates impacting buyer decisions?
Lower rates are indeed enticing more buyers into the market, which can lead to heightened competition.
What insights can you share about market volatility?
This volatility creates significant uncertainty, which is a concern for both buyers and sellers given the economic conditions.
What does the future hold for the housing market?
While we see some promising trends with declining mortgage rates, buyers must brace for continued fluctuations.
As we conclude, what should potential buyers keep in mind?
It's vital for buyers to remain informed about mortgage rates and to assess their financial preparedness when entering the market.
What an action-packed discussion we've had today, looking at various economic perspectives.
Indeed, each guest has shed light on critical issues, from Emily Brown's insights on mortgage markets to Glenn Kelman's predictions about housing.
Right. It's clear there's a consensus on the challenges posed by declining consumer spending, isn't there?
Absolutely, but I'm still processing how differently they view the timeline for a housing market correction. It's fascinating.
For sure. Emily seemed more optimistic about the adjustments, whereas Glenn painted a more cautious picture with anticipated price drops.
And let's not overlook Dr. Hunt's warnings about recession risks. He's brought a sobering perspective that stands apart from the somewhat optimistic views.
True. It's intriguing to see how perspectives on consumer behavior also differ here.
Exactly. Steve Van Meter casts a shadow of doubt on consumer sentiment, while Joseph Wang seems more in line with overall trends.
If you appreciated these insights as much as I did, make sure to give us a thumbs up and hit that subscribe button.
Your support fuels our mission to bring you even more valuable discussions with top experts.
Don't miss our next episode, where we'll cover global trade dynamics. You won't want to miss it.